The Minister of Finance, Planning and Economic Development has revealed the National Budget Strategy for the financial year 2026-2027. The budget, in line with Article 155, 1 and 2 of the Constitution of the Republic of Uganda and Section 12, 1, 2 and 3 of the Public Finance Management Act, Cap 171, is themed Full Monetisation of Uganda's Economy through commercial agriculture, industrialisation, expanding and broadening services, digital transformation and market access. The strategy, read by Matia Kasaija, Minister for Finance, Planning and Economic Development, revealed areas of focus, including expanding the size of the economy, focusing on fulfilling the 10-fold growth strategy and NDP4, its attendant program implementation action plans of doubling the GDP every 5 years in 4 priority growth drivers.
The implementation of the NDP4 and the 10-fold growth strategy. Therefore, this budget strategy builds on the ongoing phased implementation of the 10-fold growth strategy through continuous prioritization of ATMs and their enablers. The strategy focuses on strengthening efficiency in delivery of public services and improving productivity in the implementation of critical intervention for higher and sustained economic growth. The economy is projected to grow by 7% this financial year, 24-25, and at least 8% per year on average in the next 5 years. Actions for strengthening domestic financing, improving domestic savings, supporting growth of the private sector, strengthening economic and commercial diplomacy, and regional integration for sustained access to markets.
In the financial year 2025-2026 budget strategy, the government of Uganda has, however, highlighted the need to reduce on the public debt that increased by $32.33 billion, approximately 116.21 trillion shillings, up from $25.63 billion, approximately 94.72 trillion shillings, as at the end of June 2024. According to the minister, this highlights stability.
Uganda shillings 9.4272 trillion as at the end of June 2024. Of this, domestic debt was US $16.8 billion, which is equivalent to 60.34 trillion Uganda shillings, and external was US $15.54 billion, which translates into 55.88 trillion Uganda shillings. Increase in public debt reflects higher external disbursement and expanded domestic borrowing to finance major infrastructure projects. The share of domestic debt as a percentage of the total debt stock rose to 51.9% as at the end of June 2025 from 42.9% the previous year, which was within the approved medium-term debt strategy and annual borrowing plan.
To ensure the budget strategy is put into implementation, the government has highlighted strategic interventions to curb recurring challenges and risks, including but not limited to global trade war, disruptions in export markets, continued high interest rates, among others.
Actions through strengthening economic and commercial diplomacy. B. Diversification of exports and trade markets and strengthening regional and continental trade. C. Enhance digitization and automation of government systems and processes. D. Expedite implementation of innovative financing strategies. E. Implementing adaptation climate change policies and intensify activities for accessing climate finance. For example, green bonds, debt swaps for nature.
Officiating the event, Prime Minister Robina Nabbanja reiterated the need for government agencies to focus on improving infrastructure development for socio-economic transformation.
The cost of production automatically lowers, hence the increase in profit margin. It is subversive for any leader to neglect investment in key sectors of energy, the railway, water transport, roads, because no investor can be attracted to any economy to make losses. On that note, therefore, the budget strategy aims at deepening the implementation of the stable foundation for sectors such as agro-industrialization, tourism, mineral-based industrial development, science, technology and innovation, including ICT and creative arts industry and the enablers.
Nagujja Serena, NSTV.